Welcome to this explainer. Okay, today we're going to take that monkey brain of yours and fill it up with some seriously smart financial vocabulary. Why? So you can absolutely blow your friends away at your next dinner party, of course. We're breaking down the wild world of primate economics, taking all that confusing financial jargon and translating it into simple, everyday jungle logic. Let's get right into it.
So, here's our game plan. We're going to move step by step today, starting with the absolute basics of monkey wealth. Then, we'll swing into the banana stock market, check out some jungle market dynamics, and finally wrap up with advanced primate investing and how to actually grow that banana portfolio.
All right, Section 1, Basics of Monkey Wealth. Basically, what you own versus what you owe.
You see, the entire foundation of wealth really just comes down to two simple things. First, you've got your assets. These are the valuable things you actually own. Think of a slick new banana phone, or maybe some banana stocks. Then, on the flip side, you have liabilities. Those are the debts you owe. You know, like a monkey car loan or credit card debt. And hey, quick reminder, credit cards are definitely not free money, no matter what some of those other monkeys out there might tell you.
So how do you keep score? Well, your ultimate financial scorecard is your net worth. It's super simple. You just take your 500,000 leaves in assets, subtract your 300,000 leaves in debt, and boom, that leaves you with a solid net worth of 200,000 leaves. It is literally the easiest way to measure exactly where you stand financially in the jungle.
Now, building that net worth all comes down to your daily cash flow, which is made up of a few key pieces. First up is income. That's the leaves you're raking in from your job, a business, or investments. Then you've got expenses. Those are the leaves flying out the door for rent, food, things like that. And finally, there's capital. This is a really crucial distinction, okay? Capital refers specifically to the leaves you use to start, run, or grow a business. So to be perfectly clear, we're talking about money here, guys, not a capital city.
Moving right along to Section 2, the banana stock market. This is all about owning a piece of the jungle. Now, there is this pretty hilarious misconception out there in the jungle. People think that buying a single share of stock means you can just waltz right into the corporate office and shout, "Hey everyone, I'm your new boss." Yeah, it doesn't quite work like that. Buying stock just means you own a tiny, tiny fraction of that company. Size absolutely matters here. If you actually want to be the boss, what you really need is equity. That's the percentage of a business you genuinely own. So let's say the banana company is worth 1 million leaves, and you manage to grab a 51% slice of it. That means you've got 510,000 leaves in equity, making you the true majority owner. And you know what? That is when you technically get to start bossing the other monkeys around. But wait, how do we actually know the whole company is worth a million leaves in the first place? Well, we look at the market cap. Calculating a company's valuation is a breeze. You just multiply the total number of shares by the price per share. So if a company has 100 banana shares and each one is worth 5 leaves, your market cap is 500 leaves. And no, just to clarify, a market cap is not some fancy hat you buy at the farmer's market.
All right, let's zoom out a bit for Section 3, Jungle Market Dynamics. We're going to look at how the whole market moves.
So, the overarching market generally has two main moods. First, you've got a bull market. This is when the jungle stock market is climbing, monkeys are super optimistic, and hey, even the dead vine is making a comeback. It's a good time. But then you have the dreaded bear market. This is when things get gloomy. Prices are generally dropping, optimism totally fades away, your bananas and coconuts are losing value, and yeah, that vine, officially dead. We also really need to keep an eye on broader market conditions. For instance, volatility. This is all about how much and how fast the market is swinging. Are banana prices jumping all over the place in a matter of days, or are things pretty steady? Then there's liquidity.
meaning how easily can you sell what you own. A liquid asset is super easy to get rid of, while an illiquid asset is kind of like trying to sell a massive, heavy boulder. Good luck with that. Finally, who's actually running the show? Is the market a depressing monopoly, totally controlled by one single banana company, leaving you with zero alternatives? Or is it an oligopoly, which is maybe slightly better, controlled by just a handful of companies, all watching and competing with each other?
Okay, things are about to get spicy. Section 4, Advanced Primate Investing. This is the high-risk, high-reward territory where the real leaves are made and lost. Let's dive into the complex stuff.
Let's talk about leverage, also known as trading on margin. This means you're borrowing leaves from a bank or broker to invest way more than you actually have. Honestly, it's a really dangerous game, because if you speculate and suddenly those banana prices plummet, your stockbroker is going to issue a margin call. They will be frantically demanding that you hand over more capital ASAP to cover your debts, or the deal is completely off.
And then we have shorting. This is a notoriously complex Wall Street concept, but we can actually break it down into 4 pretty easy steps. Step 1, you borrow 10 bananas from a friend. Step 2, you turn around and sell those bananas right now for 100 leaves. Step 3, the price of bananas drops exactly like you hoped it would, and you buy 10 bananas back later for only 50 leaves. Step 4, you give the 10 bananas back to your friend, and you get to pocket that 50-leaf difference as pure profit. Essentially, you're placing a bet that the price of something is going to go down.
Here's another advanced move, arbitrage. And let's just clear the air right now, this has absolutely nothing to do with espionage or camouflage or hanging out with an entourage. It's literally just taking advantage of a price difference. Imagine you notice bananas cost 1 leaf over in Banana Land, but they're selling for 5 leaves in Monkey Land. So what do? You buy them cheap in Banana Land, take a quick trip, and sell them high in Monkey Land for a completely risk-free profit. Easy peasy. Now, let's talk about derivatives. I know it sounds incredibly intimidating, but trust me, it's really just a contract. Imagine George and Kong decide to make a bet. The winner of this contract depends entirely on whether the future price of bananas goes up or down next month. The actual piece of paper, the contract itself, it has 0 intrinsic value. It literally derives its value entirely from the price of something else.
Finally, we've made it to Section 5, Growing the Banana Portfolio. Because once you have wealth, you really need to know how to protect it. If you want to survive the jungle long term, you need some financial armor. First up is diversification. Do not put all your leaves in bananas, guys, no matter how tempting it is. Mix it up with coconuts, apples, maybe even throw some NVIDIA in there. Second, you want to use a hedge. This means making a secondary investment, like buying coconuts, as a backup just in case a massive storm comes through and wipes out your bananas. You also have to understand correlation, which is basically watching how the prices of those coconuts and bananas move in relation to each other. And lastly, if you ever need to borrow leaves, you'll likely need collateral. That's when you promise your shiny banana car to the bank to secure your loan.
Now, as you manage all these assets, you're going to experience capital gains. That's that glorious, amazing moment when you sell an asset for more than you paid for it. But you really got to watch out for the flip side, capital loss. That's when you sell for less than you paid. Kind of like a monkey who loses all their hard-earned leaves because they went and bought a supposedly valuable but completely useless PNG image.
And hey, what happens if you suffer way too many of those capital losses and end up defaulting on your debts? Well, you might just find yourself standing in the jungle, loudly shouting, "I declare bankruptcy!" And trust me, you don't want that. Because at that point, the monkey government is going to step in and literally force you to sell off whatever assets you have left just to pay back what you owe. Not a great place to be, for sure.
So instead of going bankrupt, Our ultimate goal here is generating passive income. We've got a couple of key concepts to grasp. First, there are dividends. Think of these as extra leaves you receive every few months from a booming business just for being an owner. It's a nice little bonus. Then you have yield, which is simply the percentage of those dividends measured against your initial investment.
Which brings us to the end of our jungle journey. Armed with these advanced terms, how are you going to casually drop the word arbitrage to sound incredibly smart at your next dinner party? But more importantly, taking a look at the real human economy around you right now, who are the bulls, who are the bears, and who is just a monkey throwing away their leaves? Keep learning, keep asking questions, and I'll catch you in the next explainer.